Welcome back. You're watching Midcap Radar on CNBC-TV18. We are now joined by Ankit Mehta, the CEO of ideaForge Technology, who joins us, to discuss the Q3 results. So first up, Ankit, thank you so much for joining us here. This particular quarter, stands out a little bit, especially when you're comparing it, to last quarter as well as, last quarter, of last year. What's actually happened is that this particular quarter, we seem to see a bit of lumpiness, especially in terms of execution. So could you break it down in terms of, what are the contracts that were executed in this particular quarter that were actually pushed ahead from the previous quarter? And how do you expect to end FY24 in terms of top line?
So what I wanted to share was that typically it was not anything that was specifically pushed out from last quarter. We are typically trying to deliver based on the contractual obligations that we have. In fact, we have pulled back particularly a very large delivery for one of our defense customers, and we were able to deliver well ahead of time in the last quarter, because of which you are able to see the revenue numbers that you've seen. And that is something which is a testament to the fact that we are able to leverage our capacities very effectively in order to deliver on our contractual obligations. So a lot of it is dependent on the contractual obligations. We have not sort of deferred anything from the previous quarter in that one sense.
Okay, all right. That is on the contractual obligations. Ankit, so the question remains, and something that investors would want to know is, what is FY24 looking like in terms of revenues? You've already exceeded FY23 revenues as a 9-month FY24 basis. Your margins have come at around 30%. Is this something that is sustainable in FY24, considering the pipeline that you have, considering the orders that you're getting from your 3 different segments?
So if I have to comment on the annual numbers for FY24, then, we should definitely expect the EBITDA to be between 25 to 30%. And in terms of, the rest of the year, I think at the very beginning of the year, we've been suggesting that we will be growing substantially this year. And like you mentioned, we have been able to exceed the revenues that we made last year cumulatively in the first 9 months. So we continue to expect to grow on that number also substantially in the coming quarter, and that should be how our year plays out. But I'm not at liberty to give the exact numbers even today.
No, the thing is, I think numbers are out now. You're out of your silent period as well. So just an indication as to how you'll grow, because on that basis, would investors know what's the growth plan for the company, right?
So what happens in our business is that a lot of revenue gets recognized on delivery, and that those deliveries are something that you have to be dependent on your customers. You have to be dependent on the timelines of the orders and the contracts as well. So we tend to not specifically call out the deliveries we are making till the time we have made them. So essentially, we tend to hold back onto that piece at this point in time. Progressively, we will probably have more ability to predict that, and we will definitely move on to those kind of numbers, but we will continue to grow in this quarter as well.
Ankit, one key indicator that investors as well as analysts look at is the kind of order book that you have. So order book at the end of third quarter stands at a little over 170 crore. So first of all, just confirm if that number is correct. And in Q3, we believe you've got orders of around 14 crore. Now, this is well below what the market was anticipating, and this has led to a bit of a concern in terms of, the revenue visibility for the next couple of quarters and even for FY25. So are you expecting any large order wins in Q4, and what kind of order book do you expect to end FY24 at?
So as you can see, so first of all, in terms of the number, yes, it is at about 175 crores as of December 31st. And in terms of, order booking, you would have seen that in the at the beginning of the year, we were at about 190. And then we went down to about 100. And then we came up to 253. And we are presently at 175. So, addition and, when we execute delivery to customers continues to help, continues to fluctuate this number a little bit. But in terms of addition, yes, we are expecting more opportunities to close in this quarter. But, on the exact number at the end of the year, I cannot predict at this point in time. But what I can say is that the opening number for a specific year is not necessarily indicative of the numbers at which we will close, because the numbers at which we will close can have a delta from there, as is visible right now that we started with 192. We have already exceeded the revenue number from that base. So therefore,
No, but-
we continue to add orders and we continue to execute in the interim as well.
No, we do get that. Of course, this opening number will not be the same as the closing one. If that was the case, that would mean that there's been no execution. Just the numbers would give an idea where things are standing in terms of your defense order book or the civil. Having said that, if you can give us a sense of your export business, it contributed in single digits the last time we spoke to you. Is this a big opportunity for you? You have a subsidiary here. What is your model going to be there in terms of growth?
Yes, so international business is expected to be a big opportunity for us. And in terms of that opportunity playing out, what we're doing is we are setting up the entire base for being able to demonstrate a product. So last few quarters had gone into ensuring that we get the necessary permissions from the government of India. Particularly, you need a SCOMET license to be able to export our kind of products there. Once these SCOMET licenses were in place, we have shipped out our product and we have started to do demonstrations to our resellers and our customers over there. So we are building a sales pipeline. I do not expect that we will have meaningful outcome from that in this quarter as well. But definitely in the next year, we will start seeing meaningful value coming from the exports business as well.
So thank you so much for that, Ankit. So export business, you say Q4, may not see a significant bump up, but FY25 onwards, you do expect to see some visibility over there. Thank you so much for your time here. Once again, we slip into a short break and we'll return with Midcap Radar soon.